As stocks still off today, let's get the trades on some of those big tech earnings we were just discussing. David Traynor is with us. He's the CEO of New Constructs. And David, eager to hear your take. We'll start with Meta, which already reported they beat those second quarter estimates, had better than expected forecast. The stock is up 4% in a difficult tape. So what's your trade on it now?
We think it's a hold right now. I mean, Meta is a super profitable company. We're really impressed with how Mark Zuckerberg has led the company post the metaverse thing. I think capital allocation is strong. They generated $60 billion in free cash flow the last few years. But the valuation is rich. We think that most of the good news is priced in, so we're not seeing a lot of upside potential in Meta at this point.
All right, so just sticking with it.
All right, let's move on to another tech stock. Amazon set to report its earnings after the bell today. Analysts expect the e-commerce giant and so much more to show revenue growth in its second quarter report. Shares, though, down today, but up more than 20% so far this year. Your trade, sir, on Amazon.
Tyler, we're a sell on this one. Look, Amazon is a lot less profitable than people think. I mentioned Facebook's generated $60 billion in free cash flow over the last 5 years. Amazon has burned or lost $125 billion in free cash flow over the last 5 years. Most people think it's a really profitable business. It's not. It's very balance sheet intensive. So those margins are misleading because the capital side of the business is really just hemorrhaging cash at this point. That's why we've seen debt up around $180 billion, and we see shares outstanding growing. So it's not quite as strong a business. The valuation is still expensive as well. So that's a sell for us.
Before we dive into Intel, would you also stay away from Apple, which reports tonight?
Apple's got a better business model. Their free cash flow is super positive, high returns on capital. Apple's closer to Meta than it is Amazon, in our opinion.
All right. So that's a bright spot because I know Intel is maybe one you're not so keen on. And they do report. We don't want to overlook it. They just reportedly have these plans to cut thousands of jobs to finance a recovery. The shares still down about 4% today and 40% this year, David.
Yeah, it's been a tough time for Intel. I mean, the business model has really fallen out of bed. I mean, a 0% return on invested capital when they used to be in the high teens. Free cash flow has been negative. And unfortunately, a lot of a turnaround is already priced in. So the market's giving Intel credit for getting back into business or back to form. But Kelly, we think that's probably good enough for now. I don't really see a lot of upside in the stock, given that so much of a turnaround is already priced in.
This was one of the great American companies, and it has been and also ran now through several cycles here. Is it a survivor?
It's a good question, Tyler. I mean, you think with the CHIPS Act and all the capital flowing into domestic semiconductor production, that would be a huge, almost a windfall for Intel. And that's part of why I think that a turnaround is priced in. So I think it's going to stick around, but it's going to probably be sort of, making the chips that aren't so exciting, not NVIDIA type chips, but chips that, are running the toasters and the refrigerators and the cars. And maybe not the supercomputers, still useful, but not a sexy stock.
Why is the market down 657 points on the Dow right now? What changed from yesterday?
Tyler, my crystal ball's in the shop, and so my day-to-day predictions are a little off. Look, who knows? I mean, this has been a wild market for a couple of years, and you guys understand how we focus on fundamentals, and we're looking at cash flows, we're looking at valuations, and we have seen so many stocks trade at entirely disconnected levels in terms of valuation and cash flows, both on the expensive and on the cheap side. There's a lot of great stocks out there that we still find. There's a lot that are head scratchers in terms of how expensive they are, the absolute ridiculous future cash flow expectations baked into them. Mm-hmm. And look, Tyler, in a market where Roaring Kitty has a real audience, I'm not going to pretend to try to predict what's going to happen from day to day if people are willing to pay attention to something like that.